Good day, everyone, and welcome to the Rock Apartment Advisors webinar. Financing your apartment building is our topic today. My name is Jim DeManis, and I'm the Chief Operating Officer for Rock Advisors. Very happy to have our guests today, and those guests are Derek Lobo, our broker of record and CEO. Hello, Derek.
Good day, Jimbo.
And as well, we are also very fortunate in that we have one of our very fine sales representatives, Manjit Virk. Manjit, how are you today?
I'm very good. How are you?
Wonderful. Okay, guys, so we're going to be talking about financing, a very important topic, obviously, in the business that we're in, and I thought that the way we would approach it today is go from the macro to the micro, talk about financing in more general terms, and I'd like Derek to speak to that, and then Manjit, we'll talk to you about some of the more specific transactions that you've worked on and how you go about on the financing end of things. So, Derek, what kind of an investor are you? Maybe you can talk a little bit about that and how strategy plays a very important part in this.
Yeah, you know, Jim, at Rock, when we're dealing with our clients, we always think about, we ask ourselves, is this a counseled client? Do we really know what the client wants to do and what their objectives are, right? So if it's a developer, it's one thing, right? If it's a guy who's doing turnaround, he may want a building with the front door on the lawn. If it's a short-term hold, the guy might not mind spending money on mezzanine financing and things like that. So it's important that we understand what the client's business plan is, and then we can be better brokers. For that person.
Okay, and in terms of the business plan, if you were counseling one of your clients, what kinds of things would you have them do insofar as a business plan is concerned?
Well, you know, real estate is a very locational sensitive business. So where do you understand the market? I always say that when I'm selling a building, the best buyer is the guy next door. Okay, he understands the marketplace. He knows exactly what's going on, and so we often joke with owners that when you're buying, try and buy the building next door. You know, is the first one. And so locationally, where do they want to be? Then what type of asset do they sort of specialize in? You know, then are they people who are active people who want to move their money on, or are they people who are just passive and want to have a core holding to create, you know, an income stream for themselves and for future generations? It's really important to understand the client's motives.
Mm-hmm. And what about funding options, Derek? What's available for our clients?
And you know, as brokers, we're the guys getting the deal done, but we also need to understand, you know, how to finance a building, especially when we're doing mid-market buildings, and Manji will talk about that a little bit later on. You know, if you don't understand how to underwrite a building, you know, the deal's just not going to go through. The guy might tie it up, think he's going to get a $1 million, you know, mortgage, and then he gets an $800,000 mortgage, and all of a sudden he's got to come up with $200,000 more, and the deal falls apart. So oftentimes, as part of our sales process, we're going out to the lenders, you know, in advance of taking the building to the marketplace and getting them to underwrite it, and just letting the buyer know and the seller know what kind of financing is available. There's, you know, various lenders to go to, private lenders, you know, chartered banks, life insurance companies, and so on.
Sure. And is it important, Derek, that you know, our clients, you know, have good relationships with, for instance, their current lender or their current bank? Is that a good place to start?
Yeah, you know, it really is, because, you know, your bank knows you. I mean, you know, we do a lot of new apartment construction, and that's a pretty new field. You want to go to a lender that knows you. And I mean, you're on the screen here about, you know, the type of finance you can get. You know, whether you go CMHC, whether whether you go conventional, whether the vendor takes back a mortgage, but the 90% of the mortgage, I think, are done are CMHC, and that probably leads to the next slide.
Yeah, absolutely. Talk about CMHC.
Yeah, well, one of the things that make apartments so attractive in Canada, besides the fact that, you know, it's just a good place to invest money today, and that there's been so little new construction that apartments are in strong demand. Vacancies are low, but that CMHC is available, and it just gives you a bunch of different advantages. You know, it substantially reduces your cost of borrowing, anything from 50 to 100 points cheaper. You've got to pay an insurance fee for sure, but that's added to the mortgage, and you know, and you can get up to 85% financing on your property. So CMHC is an advantage when you're buying apartments in Canada.
So just a little further on the financing and also the CMHC. You know, I know that here at Rock and Dalla, we often will do feasibility studies on behalf of of clients that are looking to build and or develop apartment buildings. And I know that I think it'd be fair to say that lenders appreciate the investor or the developer doing that amount of due diligence in terms of determining whether something would be successful. Would you agree?
Yeah.
And maybe you can talk about the importance of just doing that due diligence.
Yeah, when you're buying an apartment building or building an apartment building, like, you're going to know what it's going to cost to run it because you can get heat, hydro, water bills, and so on. You're going to know what it's going to cost to fix a roof if it needs it. You're going to know what it's going to cost to build a building. The big issue always is what's the rent, and what's the rent on a new building, and on an existing building, where can I take the rent to if I renovate the building? I think I've said this in earlier webinars. Every $1 of monthly net income is worth $20 in value. So if you can get a $100 lift in a unit, that $100 times 12 is $1,200, and at a 5% cap rate, that's $2,400 in increased value.
Wow, that's significant.
Yeah. Okay. Next slide then.
Derek, reasons to borrow. What are some of the reasons?
Well, what makes real estate work is leverage, right? So it's borrowing money and then leveraging it. So you need to borrow money typically to buy a building. Sometimes you need to borrow money for estate planning. If you're going to do an estate freeze, transfer the building over to your children, then there's going to be some tax to pay, and you're going to pay it now so they don't have to pay it later on. You can unlock the equity in your building and just refinance up. And remember, that's a tax-free withdrawal of money from your building till the disposition at the end of the day. So people are borrowing for green initiatives, for capex work, for retrofit, or just taking money out of their existing building and and building their portfolio.
So clearly, it's a good time to be in the industry. Would you agree?
It is, because interest rates are low, and most of our clients they know that we live in a volatile world. They're taking out 10-year financing when you can lock in 3% or 3.5% interest rates for 10 years. You can afford to pay a pretty low cap rate. Now, if this thing makes sense.
Okay, so that's great. Derek has just given us somewhat of more of a macro perspective on financing, and now I'd like to bring Manjit Virk in to talk about the micro and talk what goes into and what are the variables that are involved when you're financing. So everything from income and expenses. And Derek, as well, I encourage you to chime in when you think it's appropriate. So, Manjit, sort of walk us through this. As an agent, you're out there, you're dealing with people on the ground. You've got to look at income and expenses. What are you looking for, and what are these variables?
Well, one of the first things that I need to get is an updated rent roll with highlighting the current rents, the deposits that are in place, the dates of the renewals of the leases, the laundry income, parking income, if any, and a lot of times these days there are buildings where the landlords are maximizing their potential of their real estate, and in the sense of using their roof for income from signage,
right?
Depending on location, and Rogers Towers, Bell Towers.
Right, so all those kinds of things.
That's right. So they use their roof for income, they use the parking lot, they use all sorts of avenues that are available today for increasing income.
And what about expenses?
And that's priority. So and then what we do is I get actual bills of their hard utilities, heat, hydro, water, and waste disposal if they're using a separate company, or even if it's part of the water bill, then I make sure that that's in there as well. And when it comes to vacancy, every building is different, so therefore what I do is I use the city average according to CMHC, and that gives us a safe sort of percentage that we can use for vacancy and bad debt. And then with regards to repairs and maintenance, every landlord runs their building differently. So what I do is I put, depending on the condition of the building, I'll gauge it, and it'll, on the low end, the R&M number will be around $750. On the high end, it's around $1,100 per suite per year. And then with regards to management, that's generally speaking, it's between 3 to 5%.
Great. And then then you go on to talk about professional fees, but I'm really interested is that you have the property underwritten by a lender prior to marketing the building. Maybe you can talk a little bit about that, quick summary on how you do that.
For sure. What I do is we've got good, excellent relationships with major lenders such as First National and CMLS, and there's some other lenders as well that we go to. But what we do is it helps the landlord as well as the buyer to see something actually on these lenders on their letterhead. It really hits home when they see their letterhead and it's underwritten by them. So then they get a good idea of what the buyer's expected to come in with, and the seller's looking at what the buyer can get, so they understand the value better.
So as a Rock agent, this is the kind of service that you bring to the mid-market. We talk about at Rock that we want to bring institutional type services to the mid-market, and it would be fair for me to say then that you will do this on behalf of a client, actually go out, get it underwritten.
Absolutely.
By a lender, right? And that's very powerful.
Yeah, I think it's important to do that. That's otherwise, as Derek was mentioning earlier, that we can get great offers, but we want to make sure it goes to the end. We want to go to the home plate. So the way to do that is make sure that it's controlled through the due diligence process.
Sure.
And that can only be done by making sure that everything is accurate and correct.
Sure.
And Jim, I want to say something about doing mid-market transactions. The kind that Manjit and our team here does is that oftentimes you're dealing with Manjit, pieces of information, right? You don't get a great set of records. You don't get sometimes the sellers had the building for a very, very long time. Maybe they've gotten older. They're not keeping good records. So it's important that the broker put the package together to maximize the value, for the seller. Like a simple thing is just, oftentimes they say, here's my financial statement from last year. Well, as Manjit mentioned, we want the current rent roll because we want to take that current rent roll and multiply it by 12 because that's going to be a higher number than just last year's rents, right?
That's right.
And from there we're able to look at it and say, where can they raise the rents because we do a market survey and things like that. So underwriting a building in the mid-market is sometimes given short shrift. I think it's important that whatever broker you use, you make sure they understand apartment underwriting and the fundamentals, of underwriting.
Mm-hmm.
Good advice. So Manjit, we're on to this other slide here, and you're talking about a couple of your deals.
Yeah. Two of the deals, most recent deals that I was involved with was where the buyer came in with no financing condition, and what they generally do is they come in without financing clauses, and they go into their due diligence in terms of inspection and looking over the bills, and they refinance after closing. That tends to grease the deal a little bit, make it go a little bit smoother, cleaner, quicker,
a lot smoother.
Yeah, a lot smoother. So that happens generally with larger clients, potentially institutional clients, and large funds. One of the other smaller deals that I was engaged with last year was where the buyer came in. They did have a financing condition, but we knew that they had the cash to come in, but they had a lender, a private lender, that they wanted to work with. So what my role was to make sure that the numbers were accurate, and the only way to make sure of that is to get the actual bills and the actual rent roll, rather than what Derek was saying was just an expense and income statement.
Right, so you actually have to basically prove to yourself and to the institution that the numbers make sense and they're accurate.
Absolutely.
Okay, and moving on here. So buyer refinances after closing.
Yeah, now that's what I was talking about earlier when the buyer comes in. And a lot of times what they may do is they may buy it cash, make some improvements, and refinance it once they've improved the value of the building. And in that case, they obviously will get more loan to value. So that way they're winning as well. So they may buy a building that's kind of, for lack of better words, beat up or undermanaged, and they'll make some improvements, and then they'll go to the lender and say, okay, well, this is what we've got, this is what we want to finance, give us your best shot. So that's what happens with a lot of the larger clients.
Okay, and both Derek and Manjit, maybe just a quick summary, sort of take home points for our listening audience. What are some things that they should walk away with here, having listened to both of you? What are the essentials?
I just think if I were advising a seller, is to just make sure your broker does his homework before he takes the property out to the marketplace. Pick the broker you like and list the property. Maybe go to 2 or 3 brokers and do a broker bake-off, and then pick the guy that you feel comfortable with, that has the depth of market experience to expose that type of building to the marketplace that's going to buy it. Don't just rush and take your building out there. There might be some things you need to fix up or take care of before you expose it to the marketplace. That's my advice.
Good advice. Manjit?
And I believe the same. I concur with Derek. I know we're talking about financing. I think the most important thing is to make sure that as a seller you give honest and real information according to documents, to make sure that you don't waste your time in the sale process, and make sure that when the offer comes in, you increase the chances of closing, and that can only be done through documents. You got to have as much as you can.
Great. Well, good advice, good sage advice from 2 seasoned apartment experts. I'd like both of you to stay on the call. What we're going to do now is just take a look at some of the transactions to date, and special thanks obviously goes to RealTrack for the following sales information. So here we are, number of sales. We've got 22 sales year to date. 122 million in value, average price 116, so obviously we're comfortably north of that $100,000 mark. Largest transaction, and I look at this number, 351,000, highest price per unit last month.
It's a student housing building, so they typically transact in that range in Waterloo, because you've got 4 or 5 students living in a building.
Right. Well, that's good to know. No surprises here. 13.59% in the GTA. So let's start off. Etobicoke, we've got a purchase price here of $3.1 million, $134,000. Actually,
and that's just becoming the standard number for buildings in that area. Everything is pretty much north of $100,000, and you're going to see that, Jim, in the next couple of transactions. The one on Birchley, if you go to that.
Yeah.
Same thing here.
There we go.
The next building on Maynard again. This is a better location, I think, closer to downtown Toronto. 140,000. The next one on Islington, Islington and Rexdale. Not typically.
That's not a great area. Location, yeah.
That's what I was going to say, was even the quote unquote less desirable areas are demanding a higher price.
Right, and look at this next one here on Tyndale. Tyndale is clearly a better area than Rexdale would be, and a lot of repositioning opportunities here for $125,000. That looks like an expensive building, but you compare that to the previous one, maybe it didn't. Now, who says you can't get value in Toronto?
Yeah, maybe Derek, you've got to give us some insight on this one. How is this possible?
This was a building owned by a public company out west, and it was, I think, their last asset to sell. And this part of Jane Street, I think, is particularly tough.
Okay.
And this building just, I think, had its challenges. It was up for sale for a long time, but I think, by the pound, gosh, you can't replace this thing for 3 times the cost. It's a bit of an anomaly in the marketplace today.
And Waterloo, here we is. Yeah, here, this is it.
Yeah, this is the student housing building. We've sold, $300 million of student housing. It's a sector that we have a team dedicated to it, led by a chap named Brad McGill. But this is not an unusual price to pay. But you tend to think of student housing on a per bed basis here, and they typically sell in the $80,000 to $90,000 per bed for this type of product.
Just for our audience's edification, and in light of the fact that we do a lot of student housing, what are rents like for student housing on a per square foot basis on average?
Yeah, they're certainly higher than average apartment rents, and I would say that, again, it's a very global answer I'm going to give you, but maybe $1 per square foot higher.
$1 per square foot higher.
$1 per square foot higher than the conventional apartment building across the road in urban areas, probably less than that in suburban areas.
I find this next one, we talk about you can still buy, this is sort of by the pound, but at $100,000 in Belleville, this is quite surprising. It's a big number for Belleville.
Yeah, and typically, the thing is you don't get big growth in these secondary and tertiary markets. But I guess when you're paying $140,000 in Rexdale, $100,000 in Belleville doesn't look too bad.
Yeah. But insofar as by the pound, here we go. Niagara Falls, still some fairly good deals to be had at $66,000 per unit.
Yeah, and that's clearly becoming obvious in terms of Toronto prices, because of their ability to fix the building and raise the rent are going up, whereas that typically is not happening in tertiary areas.
Mm-hmm. Well, that brings us to an end, and I thank our guests very much. Thank you, Derek. Thank you, Manjit. For those people that would like some more information, obviously, please feel free to give us a call or call one of our great agents. Manjit here, his contact info is on the screen, and Derek's info as well. We are really, really excited about some of the next webinars that we've got coming up. Our next one is on energy management. That's a very important topic, and we've got great guests that are going to be helping us. April, we are getting into building design trends, and then new apartment construction in May, and then, of course, on we go till the end of the year. We encourage you to visit our website, and we've got some great resources there for you. Derek has produced some very fine quality and really, really deep from an educational perspective videos that talk a lot about the industry. And if you want to educate yourself on our industry, that's a great place to start. We're always looking for good people to co-broker with. We've got some great information. And Derek, I'd like for you to maybe talk about this, our third annual Canadian Apartment Symposium.
Yeah, we've done this now for 3 years, and we run 2 seminars back to back. The first one's on student housing, and the second one is on new apartment construction. And you can get links from our webpage to attend this. But we're really stepping it up this year, Jim. We booked the Sony Center in downtown Toronto. We've taken on a partner, Media Edge Communications, and Canadian Apartment Magazine to help us run the show. And it's going to be, I think, really the premier real estate event in our sector this year. And unlike other symposiums, this is a deep drill on a specific topic. So we're spending the entire day just talking about student housing. We're spending the next day just talking about new apartment construction, everything that a developer, a financier, a landowner would need to know. So we're very proud of this work that we're doing, and really bringing and continue to. Our hope is to bring thought leadership to the apartment sector in Canada.
Mm-hmm. Well, that's very exciting. I'm certainly looking forward to it, as I know Manjit. And for those that are listening, save the date.
It's going to be a lot of fun.
Yeah. Thank you very much for joining us, everyone. Have a good day.
Thank you.